What is up, everybody? All right, guys, we're going to talk tonight about the market, stock market in particular. The market's super hot right now, and a lot of people are hearing a lot of different advice and ways to go with their money. And I want to put a stop to that. So you guys saw this in the story today, guys. The market is going literally insane. All-time highs after all-time high, after all-time high, after all-time high, after all-time high. Like, it's literally nonstop. And the problem with that is that when things are moving really fast in the market and you're doing the wrong thing, you're going really fast in the wrong direction. What I want to do is put a stop to that tonight. For those individuals that really want to build wealth, to do it the right way, that's what we're going to talk about tonight. We're going to talk about a lot of data, and the data is what's really going to be significant in this conversation, guys. I can talk about whatever I want to talk about, I can talk about, right? I can say this, I can say that. You know, the next person say this, they can say that. But what I fundamentally follow is the data. The data tells me what to do, and the data is what everybody should do naturally, because that's what the numbers tell you. So you don't need to guess with the market. You don't need to listen to your latest guru. You need to follow the data. So whether you listen to me or not, that's irrelevant. Listen to what the data has to say, and I'm going to show you some really, really crazy statistics. Not to mention, guys, people in my circle are getting crazy results. This is the last 4 months of just I've even checked it as of today, to be honest. So this was like a couple weeks, this was like a week ago or so. But over the last 3.5 months, we have taken this portfolio and grown this over $300,000. As you can see, $124,000 in May. In June, we followed that up with $105,000 a month. And then in June and July, we did $100,000 collectively as well. And so every single day, we're talking about the same fundamental principles based on the data that I'm going to talk about tonight and break down. And that's exactly what I want to get everybody to understand, because that's how you actually make money. I'm going to share some data statistics with you guys that are going to really rock your world. So a lot of people like to talk a big game about how to build wealth, and they like to say, this is my strategy, this is what I do. Here's the reality. Like I said, if you follow the data, that's going to tell us what we need to do. Here's exactly what we want to do. Basic, fundamental research when it comes to finance and investing. My national bestseller, The Roadmap to Financial Freedom, and A Millionaire's Guide to Building Automated Wealth. This is what we found. Everything I talk about is foundational. It's in here. So when we talk about how do we build wealth the right way, we think about how do we build a system that gets us from point A to point B in the most opportune way possible, the most tax efficient way possible, and the quickest way possible without sacrificing our entire life, because we don't want to sacrifice our entire life just to build some wealth, because it's the dollars on a screen, it's numbers on a screen. We want to really, really build true wealth. So to be able to get from point A to point B, live life while you're doing it, enjoy your life, because you should, is in a really, really practical way, guys. We are talking every single day with people in my academy. We had Kevin, $240,000 net worth increase in 6 months. That is on the screen. You guys can see all the details of every single student. Every single student that we work with, we do the basics, we do the fundamentals, we do the things that work. A $92,000 net worth increase just a couple of days ago with Carly. This is somebody that came into the academy that didn't believe that they could do this, that didn't believe that it was this easy. And I kept harping the same exact message we always talk about, is the fundamentals. The fundamentals of winning with money is how you win with everything. And so the same principles that apply to how do you become healthy? How do you become wealthy? How do you become the best family man? How do you become the best boss? How do you become the best father? How do you become the best husband, spouse, whatever the case is? They're all timeless principles that are built into our system financially to allow you to win financially. So one of our other students just paid off their house. This stuff is happening on a daily basis, guys. And you see Herman, he shed his financial advisor, and his increase in return was $35,000 once he did that 26 days ago. This is the stuff that happens every single day in the academy. And this is the stuff that you can do yourself. This isn't rocket science. These are individuals that are like head and shoulders above the rest. These are individuals that they make a good income. They're not really sure where to put it. They're not really confident with their money. They're trying to pay off debt. They're trying to, maybe get their investments right. They're trying to do something with their money, but they can't figure out how to get to the goal that they want. And they're just thinking, I know I need to grow my money, but how do I actually fundamentally do it in a way that I get from point A to point B? And so I can actually hit the goals I want, because there's no reason just to go from 1 million to 2 million to 2 million to 3 million. What's the point? There's no point. The point is so that you can live the life you want to live. How many of you guys want to travel the world? Right? There's nothing wrong with that. How many of you guys want to become financially free by 45 or 50? How many of you guys want to quit your job? How many of you guys want a spouse to stay at home with the kids? How many of you guys just don't want an asshole boss? Like something simple. Like I just want to own my time. I want to wake up. I want to go to the gym when I want to go to. I don't want to have somebody tell me what to do. How many of you guys want that? I mean, like, I think we all can agree. We all want somewhere in the ballpark of that. And the key behind this is getting the fundamentals in order. However, with that being said, guys, let's start off with some data tonight, because the data is what I talk about a lot, but I don't always point you to all the data points every single time because it's impossible, obviously, right? One of my favorite metrics to look at is the impact of trying to decide what to do in the market. So the decision-making process that you have at your fingertips every single day, it's easier and easier and easier. We all have cell phones, right? So I can get on my cell phone and I can go into my, Robinhood or Vanguard or Fidelity or Charles Schwab, and I can click a few buttons and I can make big financial moves pretty quickly. I can go buy the largest 500 companies within about 5 minutes if I wanted to in the whole entire world. I could go and sell away my entire retirement account if I got scared, because it is so easy to do in today's world. So incredibly easy. And so what I want everyone to do is make sure they're aware of that. Because what is a huge pro in today's world is I can quickly do things. I can quickly buy something. I can quickly sell something. That is one of your biggest issues when it comes to investing. There was a study done from Fidelity. Fidelity ran a study on their most successful investors. And their most successful investors were two things. Dead people. Dead people were their best investors. Okay, so what does that tell us? That's morbid, I know. Dead and inactive. People that have not made a move or logged into their account in a long time, and people that literally were 6 feet under the ground. That was the best investor. So now I take a step back and say, okay, that's the fact. That's the fact. Why were those individuals the most successful investors? Then I go to data that cross-references that fact, that makes sense of that fact. Here's this data point that you're about to be shocked by. You are about to be shocked. Okay, I'm going to flip the screen around. I'm going to show you guys some data points on my screen that backs why this is the case over and over and over, and why people are overcomplicating finance. Finance is easy. It truly is easy, because the less you do, the more you receive. The less you do, the more you receive. Watch this. Okay. Oopsie. Okay, let me flip this around real fast. Okay, so this data point right here, this is the S&P 500 fund, okay? Let's say we made a $20,000 investment and we invested that in 1979. So 43 years ago with this time period right here. So 79 to June 30th, 2022, okay? You start with $20,000 and you let that ride. If, I'm going to go down the bottom, if you stayed the course and you did nothing. So if you did nothing, if you were the dead and inactive people, you would have received 11.59%. That would have turned into $2.1 million, okay? If over a 43-year period, you missed 5 of the best days, 5, not 5,000, you missed 5 days over 43 years, your return would have dropped by $800,000 to $1.3 million. Okay, so let me flip this back around. Okay, so if you miss the 10 best days, as you can see, the stats get worse and worse and worse and worse and worse. So that $20,000 over a 43-year period would turn to $103,000 if you just missed the 60 best days. 60 days over a 43-year period is nothing. That is nothing. What that is specifically people trying to time the market. Let me go break down some more data, because I'm about to rake on this data tonight. Okay, so I'm going to flip this around. So the other thing people are going to think, okay, let me zoom this out first. Let me go S&P 500 real fast. Okay, so if I want to look at the max right here, and I'm starting out in, like, let's just say 2009. Everybody and their brother right here, this was the Great Recession, guys. This is 08. This is 06, 08, 07, 09 right here. That right there is the Great Recession. That's a really bad time, historically speaking. But as you can see, what continues to happen over time. So when you're in the moment in your 1 year or your year to date or your 6 months or your 1 month, this chart gets scarier and scarier and scarier, because what happens is it goes up, down, up, down, up, down, up, down, up, down, up, down. There's a lot of volatility. And all of a sudden you're one day and you're like, wait, what's happening here? But when you zoom out, when in doubt, you zoom out. Now let me break this down. So let's go over a 5-year basis here. So let's just say, back when I started talking, let's say 2019, close to this time right here, I consistently was investing every single week, every week that this was hitting, no matter where this was, whether it was all the way here at the top, whether it went all the way down here. So in 2022, we dropped from the top down here, about 20%. And we went then in 2023, about 25% run, 24, we basically did the same thing over and over. And then in 2025, what just happened? The tariffs conversation came out and boom, we dropped. But what was I doing the whole time? What were all my students doing the whole time? They invested whether we were here, whether we were here, whether we were here, whether we were here, whether we were here. It does not matter. At the very, very top, we still invested. Why does that work? One, because you're never going to time the market accurately. Let me go back here. 8 of the 10 worst performing days happened within 1 week of the 10 best performing days. This right here is why you will never guess the best days. And that if you try to time the market, you will be this individual, this individual, this individual, so on and so forth. And your results are going to be lesser and lesser and lesser and lesser and lesser and really shitty. And if you start to understand the data behind financial decisions, you're going to start to make better decisions. And the game rewards the patient. The game rewards people that hold their money in the market. And why is this effective? So you might be thinking, well, couldn't I just wait till the market drops and then buy at the right time? Sure, if you were God, if you knew exactly when it would drop and you knew the exact timing, but you don't. And even if you were really good and really educated, like myself, I did this for a living for 7 years at Deloitte. I literally broke down huge company financials for 7 years. And I had the least confidence that I could do that, because I know that I've talked to billionaire hedge fund managers in the foyer of my friend's house in Puerto Rico, and he said, "You are silly to try to time the market." A hedge fund manager, a billionaire hedge fund manager. Do you understand the point I'm trying to make here? It doesn't matter who you are, how educated you are, how experienced you are. You're not going to guess the market. The guys that guess on the market are the guys that are making money on the fools that believe they can beat the market. All right. I need to set this down for a second. When I was in Puerto Rico, my buddy's house is $15 million. And I don't say that because I'm just trying to give you perspective of the place we were at and the people we were talking to. My buddy has 3 houses in Puerto Rico. One of those are $15 million. He Airbnbs it out. Bad Bunny. You guys probably know Bad Bunny. LeBron James, Gerard Butler. Gerard Butler is Netflix is signed into this account when I walk into this house. So we get into this house, and a billionaire hedge fund manager was Airbnbing it out that week. But we were at my buddy's other house, which is a $3 million condo on the other side of the island. And so we get to his new house, and we talk to Adam Sendner, a billionaire hedge fund manager. And the first thing I asked him, dude, I am so grateful to meet you. I want to talk to you about all these things. I know I'm not going to bug the crap out of you. I just want to get a few questions off. And so we started talking about different things. And he said, listen, man, you're doing everything right. You're what you should be doing. I am trying to make money. So I'm trying to beat the market. I'm trying to do different things. I'm trying to do all these things because the fool on the other end is thinking that I can beat the market. And it is highly improbable that I beat the market. Verbatim. Okay. Every statistic, rolling average, for anybody that thinks this is a one-time event, any rolling average of time, the hedge funds lose to the S&P 500 all the time. 11 of the last 15 years as of today, the S&P 500 has beat the hedge funds. Again, that's not like a new story. That always happens. And so if you consistently try to be the genius or the guru that knows this, that knows when to pick what stock at what time, you're going to consistently lose to the market. And you can consistently be the fool that keeps getting played. Wall Street makes money on the fools that want to keep playing the game. That's how they make their money. It's not because they make better picks than the S&P 500 or the index. They make their money because they send the belief to the average person out there that they can make more people money. It's Fugazi. It's Fugazi as the movie in Wolf of Wall Street they talk about when Patrick whatever his name is saying that. It's Fugazi. It's made up. When you want to build real wealth, this data point is going to scare the shit out of you. In the last 40 years, the best 10 days out of more than 10,000 days accounted for almost 2/3 of the stock market return for the entire period. So you can think that you're going to be that person that knows exactly when to get in, do exactly at the right time, get the best result possible. Or you can realize that it's unlikely to happen and there's no reason to guess, and that everybody that gets rich around me doesn't do that. Here's another statistic that's going to rock your world. Let's look at it here. This is the average S&P 500 return from 1988 to present day. 1 year, invest on any day, or invest on at all-time highs. 1 year after, 3 years after, 5 years after. When it hits an all-time high, based on probability and statistics, later in the future, it's going to be higher based on the data from 1988 to present. These data points are significant to your results. They're significant. And when I talk about the fundamentals of wealth building and that you don't have to be a market genius and a market timer and know all this stuff, when you buy the index, the basket of stocks, the basket of the companies that you can actually invest in for the long haul, what happens with those baskets is the top dogs, they get pushed to the bottom, and the new dogs come to the top, and they compete and they fight. You have a basket of a bunch of dogs, and these dogs are fighting against each other all the time. And some of those dogs get ripped out of the pile, and new dogs get put in the pile because they're younger and they're fresher and they got new blood, and they're going to make it to the top because they got the new technology, and they got the new data and the new information and the new age CEO. And that individual, because of a capitalistic market, will constantly be competing to the top. So at all times, your basket of stocks, your basket of dogs that are competing are always working towards the top. And so therefore, over the long haul, unless the world stops spinning, which we would have bigger issues then, you are guaranteed, essentially, without being guaranteed, a good positive return over the long haul. The average is 10% long-term range. However, another data statistic that might help you out here, it is rarely 10%, 8 to 12% in a given year is very rare. We talk about 8 to 12% on average returns. We talk about average returns all the time. But 8 to 12% specifically hardly ever happens in a given year. And in fact, right now, today, I think it was 10% last time I checked, which is a 5% chance. 5% chance it ends like this year, based on hundreds of years of data. So if I know all of the data points that make up the decisions that I should be making for my future self, my future portfolio, I'm going to have a way higher probability of making much more money than the average idiot that decides to try to time the market and do all these other things to try to get rich quick. When the market's high, now let's go back to another piece here. This is extremely important. Let's go to a specific fund. Let's go to VTI, okay? So VTI is the Vanguard Total Stock Market Index, okay? If I go to year to date, let's say this price point is 316. So we have to pay 316 per share as of today, which is right here. So 316.47 on August 15th of Friday, August 15th, right? $316 a share. Let's just say I put $500 away. So $500 away every 2 weeks. Now this price, that's going to fluctuate. We know that because it's going to go up, it's going to go down, it's going to go up, it's going to go down. We know this is going to fluctuate. We know that. That's a fact. However, and as you can see, year to date, it's about 9%. This is a 5% chance that ends up 8 to 12% this year based on historical data. 5% chance. So let's say we buy $500 worth, and over 316, we're buying 1.5 shares, 1.58 shares at this point right here. However, what happens if we would have bought right here? If we would have bought right here, let me move my thing out of the way. If we would have bought right here, we would have bought, let's say, $248. So instead of that, we say 248 divided by 500 divided by 248, and we would have bought 2 shares at this point. So as the market's going down, I'm automatically buying more shares, 2 shares this time, and at the top I bought 1.5. And as the market moves, as it goes up, I'm buying less shares, which is the important number right here. It's not the price, because you're buying fractionally. You're always putting $500 in. So the fractional number is what really ultimately matters. The price of the fund is pretty irrelevant it's not irrelevant for the long haul, but it's irrelevant for the decision to purchase a fund. Just purchase the fund consistently with the $500 we're using here. And if it goes down, keep buying, because you're buying more shares. And as long as you're buying a basket of stocks, which is the total US stock market index with this example here, VTI, there's no way that that's not going to come back up with time. So we're going to have periods like, if you look at the 5-year period here, right here, in the beginning of that year, 2020, at the end of 2021, early 2022, we went 20% downward. So everybody right here, guys, was telling me, don't buy. It's the stupidest thing to buy in the world. I bought the most in the stock market I ever have in my life right here, based on year to date, my whole entire life. So 2022 at the time, not anymore, but at the time, that's the most money I ever invested in the stock market right here. And the market was going down the whole entire year. But as the market went down, guess what happened? I bought more shares. And so what happens on the reverse end, when this evens out and this goes right back up, I get really, 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 really rich. And then I see this little divot and I laugh, because I remember when I was buying down here. And in fact, if I go back to the max, I remember when I was buying down here. So buying here doesn't scare me whatsoever, because I was buying there. And if I was buying there and there and there and there and there, how could I be scared to buy right here? But everybody in the moment sees this. They see, oh, well, I was only buying right here, and now it's down here. I need to wait, and I need to not make sure I don't buy right here. I need to wait till it gets back in order. But that's the dumbest argument in the world for a few reasons. For obviously all the things we talked about already with all of our data points that we talked about. But the other thing is that if we aren't consistently buying, we consistently aren't buying shares in the market, which means we're getting broker by the day, because where does that cash flow go? It sits in your bank account. And when that sits in your bank account, guess what happens? Inflation starts to erode your purchasing power. So you have to invest or you will be forgotten about. So when this dip happens in COVID right here, and this dip happens during the COVID during the tariffs, and this dip happens in 2022, you should light up. That volatility is a great thing to happen. Now, I'm going to show you something else that's going to scare you even more in a good way, because this is where it all wraps together. This is where you make the money. So all the lessons we talked about so far are good. Let me show you JP Morgan Guide to the Markets volatility chart. Let me see if I can pull it up real fast. This chart is a beautiful chart to assess and see, because this tells you the truth of the market. Okay, this isn't probably the most recent, but this tells the same story. Let me make sure I can pull this up. Okay, so I'm gonna do this real fast. So how to think about the volatility of the market. Super important, because most individuals are scared when this happens. They're scared when this happens. They stop investing right there. This is when you make the most money, by the way. It doesn't show, but you make the most shares. So if you go calculate the number of shares you bought and you train your brain not to look at the total price times the number of shares, your account value, but just the number of shares you bought, you'll realize you're getting richer at the bottom. Anytime the market drops, you're getting richer because you're buying more shares, and everybody's panicking here and you're buying more. So when it goes up, it goes even more for you. But let's go back to this. JP Morgan Guide to the Markets. Let me see if I find here's my chart right here. Okay. So this is from 1985, right here, 1985, all the way out to 2025, okay? In this chart, what this is showing is that during the year, there's a lot of ups and downs, lots of volatility. This is when people panic. They start freaking out when it goes like this. All these little dots down here are the lowest the market went in any given year. So as you can see, almost every single year, almost literally every single year, we had very low points in the market. We saw a -5, -10, -15, etc. You can see all these negative percentages. That's the lowest it dropped in any given year, and it almost happens every single year, which is why every single year when people panic, I literally am like, can anybody study any bit of history here? The blue is where it ended at. So really think about this. Let's go for this, 1987, for example. The market was down 34% in 1987. It ended at 2%. So somebody that was buying right here had a 36% swing upward. This individual that buys here, 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 that buys right in the middle, that buys up, down, and in between. That individual is going to get loaded. That individual over the long haul has an extreme advantage because of all the data sets I've already shared with you guys tonight. But what I will say is the fundamental way of winning with money is not trying to time the market. It's not trying to be the perfect genius investor or think that you're not smart enough to do this. You are. That's the point I'm trying to make, is that everybody here thinks that they have to be some genius to build wealth. You don't. Guys, I can tell you right now, the fact that I built wealth of all people, somebody that came from zero financial literacy, somebody that's very average intelligence, somebody that just did the boring stuff very good, and I have a $4.6 million net worth and counting. I'm about to cross the 5 million mark, and I will hit the 10 million mark here soon. If I can do that, and all of my students that I showed you earlier can do the same, these are my results. These are real results from my real brokerage account. $300,000 of gains in 3.5 months, 4 months. Why would you not be able to do this? $2.5 million in this brokerage account. I got $718,000 in gains. I have $750,000 in gains. I almost have $1 million in passive income I've earned by doing what I'm showing you right freak now. God. So let's talk about this. Those are my results, but I can't speak for my students. My students do the same stuff. They pay off their house. Right here. The stuff I showed you guys earlier. Herming, his performance return increased by $35,000 when he left his financial advisor. In 26 days, Kevin increased his net worth by $240,000 in 6 months. Why are these people consistently doing what I'm showing you on the screen in teachable lessons? Carly, in 11 months, increased her net worth by $92,000. So why are these people doing it? Are these people just my special people that just happen to get lucky too? Am I lucky? Is everybody around me lucky? God dang, if everybody around me, if all 2,200 people are lucky around me, I must be like some signal to the world of good luck. If it's that easy that I'm just so lucky, and all of my 2,200 students are so lucky, and they just simply follow my exact roadmap, and they have the exact results, you tell me how they're figuring this out. It's because they have the precise answers, the precise system in order to do this. This is bigger than just investing. Investing is this, if I were to look at the personal finance equation, personal finance is a big circle, big in my big head. I would say personal or investing is probably my 2 eyeballs, size-wise. You get my point? It's a small piece of the bigger picture. You have to understand how to manage your cash flow. You have to understand your taxes. You have to understand your estate plan so that when you pass away, your family gets the stuff they want to get in the right way. You have to understand allocations. You have to understand the education behind this entire thing. You have to build an automated financial system so that this does everything we're talking about. Because if you try to manually go do this, it's not going to work. There's not a chance it works. If you try to go do this on your own and you don't have a full system behind you, backing you to do this and make this work, it's impossible. So many people on this call tonight. Listen up. So many people on this call tonight if you literally took exactly what I did, what I just talked about, and you apply all the principles we talk about here, or you join the academy and you take every single step we talk about, and you're extremely boring about it, you don't hit the moon, you just do the exact boring fundamental steps that nobody likes to talk about, and you're going to get really, really rich. I will shake your hand on it. And if I'm wrong, I'll give you $1 million. Over the next 10 years, everybody has my word on this. If you take the exact steps that I talk about, that I preach in my national bestseller, that I talk about with my students, that I talk about with my content every single day, and in 5 years or 10 years, you are a broker, I will give you money. The point is, I'm not going to give you money. I just know my process works. Get my point? You're going to increase your net worth by hundreds of thousands, by millions of dollars within years, within decades. And it's a super easy process. But why do people not do this if it's so easy? Because they don't believe, number one. Most people just don't believe, so they mark it off. Well, it's not possible for me. People like me don't get rich. There's no way this is real. That's part of it. The other part of this is that people start to do it and they stay human and they don't do what I tell them to do. So they just start trying to do a bunch of random things. And they're like, well, I learned this on this YouTube and I learned this here. And this guru told me to trade this stock at this price. That's also a reason. The other reason is you can't stay patient and everything I tell you is boring. So you want to take more actions and then hurt yourself even further. Guys, one of the funniest stories that's ever happened. One of my students became a millionaire very recently. He's on a call. He comes into the academy. He has no clue about how to build wealth. He has money. He's making decent money. He just doesn't know where to put it. We start to put it in the right spots, the right buckets. We start building his wealth. All of a sudden, within 3 years, he becomes a millionaire. He crosses the millionaire mark. He goes to $1.56 million over a 3-year period. He hits the $1.56 million mark. We're all hyping him up. We're all excited. About 2 weeks go by. He's done everything I've told him to do. He's become a millionaire, multimillionaire, in fact, and he's continually just doing the boring steps. He gets bored. He actually ate with me. He came to Dallas and had dinner with me as well. And we were talking about the same stuff, of course. And so he comes on one of our Thursday calls, which is to all my students, and he goes, "What's next? I need to do some more stuff." I'm like, so I'm telling you, no matter how successful somebody can be, we're talking millionaires. I created millionaires. That individual still asks, what's next? Because most people aren't going to want to sit still. Most people don't want to sit still. They want to do stuff because that's our human nature. So you might ask, how do I stop myself from hurting myself? That's good you ask, because I help you from not harming yourself. This is where the automated financial system comes into play that I talk about all the time. The stuff we're building in the national bestseller, we talk about it here. The stuff we build with students one-on-one, where everything in your financial situation should be really boring and it should be automated. All your bills, all your debt pay down, all your investments, every single financial move that you make outside of like going to the grocery maybe should be automated. And when you have the automations working and you have the system that's pre-programmed to say, if something does this, do this, and it starts to do and work for you, you don't have to do anything. And so therefore, you can't harm yourself if you're not going to manually decide. So we take the manual decision-making power in your little head that's like, I should do this. I should do this. Should I pay off this debt right now? Should I invest? No. We're already going to decide. We're going to create the math problem. This is one big math problem. We're going to create this huge math problem. I'm going to walk with you one-on-one, myself and you. And we're going to say, okay, this is Jenny's goal. Jenny wants to pay off her $28,000 of student debt. Jenny also wants to retire by 54. Jenny plans on having 3 children. Jenny is married. All that information is going to go into the system, and it's going to generate a result. And that result says Jenny should put $500 a month in her taxable brokerage. Jenny should put $300 extra principal to her student debt. And if we do all of these moves, everything happens in sequential order to what we told it to do, because it's a big math problem. So I know my debt payoff is going to be paid off. I'll show you a little bit of this. We'll show you real time how to do this. So let's just say we have a debt payoff. Okay. I'm going to show you one of the tools we use. Okay. So one of the tools that we actually use is this right here. So this is a amortization schedule, super simple. All of this down below is automated. So let's just say Jenny has a $50,000 loan. We know all of the inputs are right here. The yellow highlights. How hard does this do? Could you go find me your current loan amount? Could you tell me what your APR is? Could you tell me what your minimum monthly payment is? If you can do this, I can get you wealthy. Isn't that crazy? Okay, so let's say Jenny has a $50,000 student loan debt and she feels like she's never going to pay it off. And I take into all of her information, all of her cash flow. We go through her budget. We get all of her free cash flow numbers, which are many steps before this. And we get to this conclusion. We say, okay, this is going to take us 10 years, 120 months at 5.175% interest, $534. Let's just say we have $3,000 cash flow, free cash flow from steps prior. Just use your imagination how we got to that number, okay? We get to these numbers where it's like, hey, this is your free cash flow. So we'll figure out your free cash flow before we get here. We're going to go down here and say, okay, this is going to tell me how much principal, how much interest every single day of the month, or of the year. So 12 months period. And we're going to go to the very, very bottom and we're going to say, okay, we're going to pay zero base balance at this last month, 120 months. Okay. So we have $3,000 extra, let's just say per month. And we're trying to allocate this to all of our goals because we figured out our true free cash flow. And our true free cash flow, based on the timelines in which she wanted to get to these different debt payoff or these different goals. Maybe she's like, hey, I want to pay this off in like 4 years. Okay, Jenny, let's figure out the math. What would it take to get paid off in 4 years? Let's just do some simple math. If I put an extra $1,500 a month to this, how much would it save me? Oh, that's pretty good. Crossed out right here automatically for you. That takes me to 27 months. Okay, that's way better than 4 years. I don't even have, if you want to do 1,500, you can, but we can go less. We don't have to guess anymore. So now let's get this to 48 months is where we want this to be. 48 months. Right now we're crossed out. We're at like 2.5 years. We're at 30 months right now. It's going to be the payoff date. Let's just say we go down to $1,000 a month. And again, I scroll down and we're at 3 years. So let's say Jenny sees that she can pay this off with an extra $1,000 per month in specifically 3 years, 36 months. She's like, you know what? I was going to do it in 4, but now I'm excited and I got the money. I got $3,000. So I'm going to take $1,000 of this and that's going to go to my student loan payment. And I'm going to go into my portal, my student loan portal, and I'm going to go automate this $1,000. So every single month on top of this $534 minimum monthly payment, I take the extra $1,000 and I apply that to my principal beginning period 1. And if I do that, here's how much interest I'm going to pay. Specifically, if I can add this up correctly, I'm going to be paying $4,000, $39.99 and some change of interest over this 3-year period of interest. And over this period, I'm also obviously going to pay the $50,000 principal. So all in all, my student loan is going to be about $54,000 in total if I just put an extra $1,000 in student loans to it. And I can track my progress the whole entire time. So if, for example, I'm making my way down the list, I can do, okay, 11% equal the next month. Boom, 27%. And you can see the progress bar moving. And it's all automated. And so now I know how much cash flow do I have left for other goals? 2,000. So now I know I have $2,000 and I can take that extra money and I can apply it to other goals that I have. So let's say my next goal is to retire by 30. Okay, let's just use an easy example here. Let me pull this up. Let's go to a compound interest calculator, super simple. And let's just say I'm investing, I have $0 invested right now. And let's just say I'm investing $1,000 per month and I'm going to be doing this for 30 years. And let's say I'm getting a return of 10%. Let's see where I would be based on this situation. Okay, in 30 years, I'm going to have almost $2 million. And let's say $2 million is my financial freedom number. So I take $2 million times 0.04%, and I can live on $80,000 per year. Let's just say that's where I want to get. That's my target. That's my goal. Okay, if I can do that, and that's this situation here, but I go back to my free cash flow and I realize, okay, my debt payoff's done in 3 years, but I have $2,000 for the next 3 years. So the next 3 years, while this is being paid off and I don't have access to that 1,000, I have 2,000. So here's what we're going to do. We're going to add $2,000 a month to this right here. So instead of 1,000, we're going 3,000 now. So for the next 3 years, which will turn this to 3, we're going to just do 3,000 a month, 10% for 3 years, okay? Which is going to equal 119,000. At the end of this 3 years, guess what happens? This debt is gone. This balance is 0. You have no more student loan debt. So this $1,000 comes back to you. So now I have $3,000 to work with. My starting point's 119,000. So let's just say now 119,000 is my goal or my target start date. I now have an extra 1,000, so I have $4,000 available liquid. And now I'm going to go for the next 27 years, 30 minus 3 at 10%. And my result is now freaking $7 million. Did you see what I just did? That just changed somebody's life. Jenny's life just got changed right there because I maximized my free cash flow. I understood my goals. This is a very high level example, very simplified example. I paid off my debt in three years. 3 years, I paid off the student loan debt, $50,000 gone. I then my goal was $2 million. I ended up with $7.2 million. And so my point is, guys, if we take this step by step and we fundamentally look at every single step of the equation, you can't lose. The only way you can lose is if you don't believe you can do this. The stuff I'm showing you straight on the screen. If you guys don't believe me, come to my free events. I run free events all the freaking time. And every time somebody comes to my free events, they're like, man, I was watching you for a long time and I didn't think this was real. Then I went to your free event. You didn't charge anything. You didn't even ask for anything. And all of a sudden, I realized I can become financially free. I can pay off my debt. Because I have people email me all the time. Never pay me a dime in the 6 years I've been doing this publicly. And they'll say, dude, I've been following you since 2019. I paid off $100,000 of debt. Dude, I've been following you since 2023. I've just been applying your principles, and I increased my net worth by $400,000. I get that on a daily basis. My email, my DMs, everything. All of this is a science. It's a big math equation. And if we understand the math equation, which I understand very, very fully, and I can say, Jenny comes into my system, we start to look at each and every single step of the system, and we say, Jenny, what do you want to accomplish? What are you trying to do? And Jenny's goals might be different than Mike's. Mike comes to me and says, dude, honestly, I don't want to, become financially free at 45. I really just want my kid to get a great education. And I want my wife to stop working. And I'll work till 60 if I need to. And Mike comes in with a whole different set of goals. And Mike accomplishes those goals. And Jenny accomplishes her goals. Ultimately, we're just using the tools of the system to make those reality. But if you want to make your reality happen, you have to do something about it. You can't be sitting there and just hoping you make more money next year. If you make more money next year, guess what's going to happen? If it's not working now, it's going to work worse for you at a quicker rate next year when you make more money. If I gave everybody here $1 million, how much you want to bet I would end up with the most money at the end? The person that knows and educates themselves on the topics that we're talking about, and we give let's say we line up 10 people, okay? I'll give you a good example. Let's line up 2 people. I give 2 people $1 million, one educated, one uneducated. Guess what's going to happen? The $2 million is going to end up in the educated person's hand. And the person that's not educated is going to end up with nothing. Even if I keep giving him money, if I give him $6,000, $5,000, $20,000, $25,000, just to kind of keep him afloat, he's going to not know how to apply this money, and it's going to be evaporated into thin air. Either by inflation because he doesn't know what to do. He's panicking. So he sits on cash because he didn't know what to do, sitting in his bank account. And he's like, I don't know what to do. Well, guess what? You're losing money that way. And if you take your money and you do something stupid because you don't know what you're doing, you're losing money that way. And so unless you know what to do with it, you're going to lose money all the time, no matter how much money comes into your system. Like, you get my point here. You're not just going to all of a sudden make more money and all of a sudden have a better financial situation. You're not. People with $300,000 net worth $300,000 income right now are struggling with credit card debt. People making over $100,000, most of those individuals are living paycheck to paycheck. Why are these statistics keep popping up everywhere? Because income doesn't matter. Income is simply speed. If you don't have a system to generate an output, it doesn't matter how much money I give you, because it's going to get wasted, it's going to be inefficient, and it's going to hurt you. And if you just have a system then you make money, guess what? You're going to go really freaking fast like all my students do. That's what happens every single time. It's a science. It's an exact science that works out every single time. All right, guys, I appreciate each and every one of you guys. I'm going to get off here. If you guys are ready to take action, you can comment the word book. You can comment the word wealth. The book's going to get you my national bestseller. Wealth is going to have me send you a conversation starter. We're going to start talking about your finances. Become wealthy if you want to. If you don't want to, you can stay the same. I'm not gonna be bad about it. But if you're here, you've been listening, you know you want this. Just take the next step. All right, guys, have a great Sunday. Have a great week at work. Let's win big this week. Hyper obsessed with the micro habits that are going to give you the result that you really are going to get. Don't focus on the big, hairy, audacious goal. Focus on the micro habits, going to the gym, eating healthy, getting good sleep, doing all the things that matter, putting in the inputs, making the investment contributions, setting up your automations. Focus on that, and that is going to get you super wealthy if you do that for a long period of time. I can guarantee it. I promise you. Adios.